This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, August 21st, 2015. Euro dollar. So the euro continues its impressive surge, with the market taking out key resistance at 12.15, which represents the 61.8% fib retracement off of the May high to July low move. The break above now opens the door for fresh upside towards the 78.6 fib retracement off of that move at 113.25. Ultimately, the downtrend still remains intact while the market holds below the 14.67 high that we saw back on the 15th of May, and a lower top is ideally sought out in the 13.25 area ahead of a bearish resumption. Sterling dollar. So cable has broken above some key resistance this week at 56.90, and the market is now trying to establish above this level to open the door for the next upside extension back towards a retest of the 2015 peak at 159.30 further up. At this point, the constructive outlook remains intact while the market holds above 153.50. Dollar yen. So dollar yen has broken down in recent trade, with the market breaking below key short-term support at 123, and a daily close below this level on Friday will open the door for a deeper acceleration back towards the 120 area potentially over the coming days. The market is overbought on a monthly basis, and so a correction of this magnitude is not to be ruled out. Overall, the uptrend remains intact, but again, the market is due for a bit of a correction, and we could see that play out over the coming days. Euro Swiss. So Euro Swiss has pulled back in recent trade, though the market has been well supported by that previous resistance now turned support at 106.90. Ultimately, any setback should ideally be supported in the 105.75 to 106.90 area in favor of the next higher low and bullish continuation above recent highs at 109.62. Aussie dollar. So Aussie remains locked within a well-defined downtrend, and the market has been caught consolidating recent down moves, with deeper setbacks eventually favored below 72.15 and towards psychological barriers at 70 further down. If we do see a break higher above 74.40, this would open the door for a further correction, potentially into the 77 area, and the market would then look for a lower top in favor of a bearish continuation. At this point, it's a bit of a wait and see, so waiting to see whether we break above 74.40 to open further correction, or back below 72.15 to open a fresh downside extension. Dollar CAD. So dollar CAD has recently posted fresh 11-year highs at 32.15, and the market has since been consolidating to trading a little bit lower. At this point, there's room for additional corrective action down towards the 128.60 level. That's the low that we saw back on the 29th of July, with a break below potentially to accelerate declines down into the 126 area. But ultimately, the uptrend remains firmly intact here, and any setbacks are viewed as corrective in favor of a higher low and bullish resumption above 32.15 and towards 135 further up. Kiwi dollar. So Kiwi has been locked within a consolidation over the past several days. This is a bearish consolidation above that recent low that we saw, that multi-year low that we saw last week at 64.70. At this point, the key levels to watch above and below are 67.40 above and 64.70, that multi-year low below. A break above 67.40 would open the door for a bit of a correction in this market up towards the 70 area, where a lower top is sought out ahead of the next downside extension. But an inability to establish above 67.40 keeps the immediate pressure on the downside for a break below 64.70, which would then expose psychological barriers at 60 further down. SPX 500. So the S&P 500 has been locked within an uptrend over the past several months and years, with the market putting in a record high back in May at 2137. But this latest breakdown is significant, the breakdown below that critical March low that we've been talking about, and this now sets the stage for deeper setbacks in the days and weeks ahead, potentially down towards the 1950 area. The break, if you look at a measured move of the move that we saw from 2040 to the record high that we saw up at 2137, we're looking at about a 100-point move. So this 100-point move then projects a 100-point move to the downside now that that 2040 level has been broken, which takes us down to the 1950 area. We could see that level tested as soon as the coming sessions, depending on how deep the acceleration is and how intense it is. But ultimately, this break does suggest that the market should be headed lower below 2000 and towards the 1950 area. Gold. So gold is continuing with its impressive recovery out from those recent multi-year lows below 1100, and the market is now established back above that previous 2015 base at 1142 to suggest that we could actually be seeing the formation of a significant bottom here. At this point, look for the potential for a more corrective gains that could turn into a legitimate base up towards next critical medium-term resistance at 1233. Any setbacks now should be very well supported above 1100 on a close basis, with only a close back below 1100 to compromise the recovery outlook for gold.